Let's bring in our headliner of the day. Is Dubravko Lakos, is JPMorgan's head of U.S. equity strategy, who clearly must be listening to this conversation and saying, what in the world are you guys talking about? Why are you so concerned? Why do I say that, Dubravko? Because this morning you upped your S&P target for the end of this year, 2021, to 4,700. We're at 4,450 today. I'll take that gain.
Look, it's not a big upgrade. It's a small upgrade. We're talking about a few percentage points. I think the sort of the more important sort of message that we were trying to convey to the investment community was, I think the narrative. There's a lot of narratives. There's a lot of, call it, pessimism that's been sort of especially growing in the last 4, 5, 6 weeks. A lot of talk about late cycle dynamics, more structural, broader weakening. I think it's actually much simpler than that, and it's really come down to COVID and the fourth COVID wave and Delta that has resulted in definitely a delay in the labor market recovery process. Just look at leisure and hospitality. We're still missing about 1.5 million jobs there versus pre-pandemic levels. You have a bit of a negative impact on consumer sentiment on the back of that, and you've definitely seen a bit of a slowdown in broad-based economic and cycle data. But I think the view here, and the question here is really, what's the view on Delta? What's the view on COVID? Do things ease in the coming weeks, in the coming months? And if that's the case, I think everything we're talking about right now is displaced. I think we go back into some form of reacceleration and potentially a much healthier holiday season as far as 4Q is concerned, and a pretty decent setup when you think about the first half of next year. Just a few things. Cross-border activity has not even picked up. Even very little. Tourism, nowhere to be seen. So again, are we completely discounting all of those? They will never come back? Or could we actually this time around start to see a little bit more of a broader easing wave in COVID that actually gets us closer to some form of more normal global economy and functioning? And then tied with that, the inventory cycle, which is at 25-year lows, CapEx cycle, which is at post-GFC lows, could they get a bit of a kickstart, right? So I think no need to get negative here on the cycle, no need to get negative on the consumer. I personally don't think there's huge amount of upside in the market. I think easy money has been made, and I agree that, yes, hard to get overly excited for on different parts of the market, but I do think that, for instance, the reopening theme, areas like cruise lines, I think risk-reward is actually quite attractive and quite exciting, if you ask me, and I think some of these concerns are just